Welcome, everyone. This is a hybrid presentation from our May 15th three-stock lunch. We're now offering you 15 minutes of it, unfortunately without the food and wine, at the Tudor City Steakhouse, which we highly recommend. The purpose of this is to introduce the three companies and why we're introducing these three companies for 2 to 3 minutes each, because like you, I have just too many requests for PowerPoint presentations. I don't have 18 minutes times hundreds of times a day, but I do have time for curated companies like our own, and to hear 2-3 minutes to see if I'm interested in the company. If I am, I'll go to their website, I'll download their PowerPoint, if I like that, I'll sign up for investor releases, and of course I'll put it on my trading screen, sometimes with a very minor few thousand shares, just so I'm watching it. So this is what we're about to do. This is our second one, and it's evolving, and it's getting better, I think. Before I do, we happen to have someone in the audience. We just did a WABC interview. Actually, it was done at the beginning of the month. You'll be able to tell from the timing, and we're going to present that first.
You're listening to one of the most iconic stations in the nation, an American original. Talk Radio 77 WABC and WABCRadio.com.
Henry Weingarten is a highly respected analyst based here in New York City, and it's always good to hear Henry's view of the markets.
In the first part of May, we're long. Markets have just come from being way up till February, then way down. And in the last 2-3 days, actually from the beginning of May 1st, we basically are long. However, once we get to the second half of May or early June, there's about 2 months where the market may be very challenged again, because you have to look at the fundamentals. And the fundamentals are, we have a slowing economy, recession-like. Perhaps it's a recession, perhaps it's recession-like. That's going to continue for a while, forgetting that the tariff situation will still be up and down. I think it's going to definitely be much better, but it will not be a straight line. Therefore, once we get to first week of June, if not beforehand, we will be much flatter. As professionals, we'll be long and short. We would have some cash, and we'll be mostly playing special situations. If we're in a recessionary-like environment, then things like gold can do very well, although we ourselves were in short gold around 3,400 and 3,500, but gold stocks can do very well on a long-term basis. Entertainment will do very well, but especially special situations. There are companies that have nothing to do with the general environment so much. They make money, whether good times or bad, and one should try to have some of those in your portfolio, but definitely more risk on, although it will feel like right now the risk is being dramatically reduced.
At present, Henry Weingarten is seeing certain undervalued opportunities.
One of the few things that we think are undervalued, because right now markets are still, in our viewpoint, well overvalued, is the energy sector. So if we look at oil, which can be anything below 60 to 62 is very undervalued. And there are a number of companies, like we have a company called Riley Permian, which gives a very low PE and a very high dividend, and it will do very well over the next year or two. As we're talking now, it's about 25. We think if we take it a year to a year and a half, it will be 40 to 45. And it's a very well-run company. They do a lot of hedging appropriately. That's one we like. Now, another case is in the silver space. If we're talking a year and a half, our favorite silver company is Mag Silver. Now, silver, as we're talking, is well over 30. Do you know what their price of silver is to produce it? It's 88 cents. And their all-in support cost is under $6. As a New Yorker, I like to buy wholesale, not retail. So why pay $60 when I can buy it for $6? So a stock like Mag Silver, billion-dollar company, but it also, in addition to making money or minting money, it has 3 very large opportunities for doing exploration success. Any one of them would double the stock. As we're talking now, the stock is under $15. We think it will be next year $20 to $30 plus. So there's another case that isn't affected by it. And there are other areas as well. Royalties is another area. In fact, it's very interesting. In our May 1st webinar that we produced, we put a whole section on royalties. And at the same time, I just saw afterwards 2 large investment houses having special conferences on royalties because they don't have the same risk, that they don't have the same rewards, but there's much less downside risk. So a company like Gold Royalty over the next year should go up anywhere from 20 to 50%. Those are 3 examples of things we like.
Henry, thank you for your insights. Henry Weingarten, a closely followed market analyst based here in New York City.
The number 1 talk station in the nation, 77 WABC.
Welcome.
From Wall Street to Washington to your wallet, you're listening to The Larry Kudlow Show.
Okay. You may, let me see what I put. You may have noticed, of course, that the company Mag Silver has already been bought out for over $2 billion, and we happen to have a lot of hits like that. So one of the reasons we select companies is they tend to outperform as a group, not every single one, of course. Okay, so let's go forward. And we have a lot of material, but it's going to be very short. We're only talking about 15 minutes. Time is extremely important. Again, if you're interested in any of the companies, follow up. We recommend it. So. Disclaimer, of course, if you're not a market professional, do appropriate studies and get other opinions besides my own. Okay, we think the market's very simple to understand. It's simply first half of the year, multiple crises, partial resolution by mid-May, and remember we said that at the beginning of the year, actually last year. But remember, the economy is slowing. It's either going to be in a recession or recession-like for the next year. Short term, of course, we're having stagflation, but we'll be having deflation as well going forward. If you follow our Twitter account, we basically were, at the beginning of May, extremely long and short gold both from 34 and 3,500. Why? Because gold is trading like a crisis, and looking at the horoscope of Trump, we knew these crises would be reduced, i.e. gold and silver would drop. Many people feel like this, leading to recession, going out of business, and people who do distressed investing for the last 2 years have been celebrating with champagne and caviar, and they're certainly expecting to do so for the next year or 2. Again, be greedy when others are fearful, and that also means that at the beginning of this month you better have money to invest, and you could have made 30, 50% or more. There are a number of investment risks one has to look at: country risk, technology risk, and market risk. Our approach now is, if you're an investor, not a trader, because that's a whole different ballgame. If you're an investor, you should be investing for November 2026, and make sure you have the ability to buy when markets go down again, which they are likely to either this summer and or next winter. Again, good stock picking greatly outperforms index funds. We've been saying it's generally the case, but it's always been relatively neutral until this year. This year, it's a slam dunk. Remember, invest for November 2026. Trump is known to be the most favorable president you could possibly have for the stock market. Why? He believes in lower taxes. He believes in less regulation. The critical number was December 31st. The S&P at 58.81. It was an obvious target, and we got there. Now the January 20th target, which is 59.96, and we'll be in a trading range above or below that for the next month or 2. In terms of gold and silver, rather than buying like crazy, like everyone's been recommending, and what was a 4,000 target is now a 6,000 target, etc. We believe the correct thing to do is to slowly accumulate on weakness quality precious metal stocks, because they will well outperform. We can show you chart after chart. They will outperform the physicals. Now, if I'm wrong and gold does go up and silver goes up, the stocks will go up more. If I'm wrong and it goes down first, then they will drop more, but very shortly they will stabilize and be great value stocks, because gold today is trading like it's $2,100 and silver is trading like it's $20. Okay, so that's our view, and we think it's a way to make more money with less risk. So what's the fair value of gold? Many in the audience will disagree with me, but the fair value is about $2,500 and change, and it'll be roughly $2,600 by the time we hit the summer. The reason it's been higher is because it's been trading like a crisis metal. But we knew, looking at Trump's horoscope, that there'll be a lot less crises coming up, and there'll be less, and therefore it will drop. Right now we're testing 3,200, and we think a good test of 3,000 is upcoming. And again, we believe in staying long precious metals, both as an investment and a portfolio hedge for both. And again, quality stocks will outperform gold and silver, certainly on a 2-year basis. Our philosophy is, and there's some astrology, we can look at this in the May webinar. 3 ideas we like: gold and silver, entertainment and cash. Entertainment, by the way, does very well in good times or bad, and during the Depression, along with gold, did extremely well. You want cash for income, you want cash for distressed and deep value, and you want cash for special situations. Through August, there's no clear sailing. It's going to be rough riding. I think we'll get through it, but we're likely to have another negative GDP if it's properly recorded. Something new we're emphasizing, and many other people are, as we're just discovering, are royalties. Because in royalties, you have far less downside risk and much, but not all, of the upside. So 3 of our favorites, EME royalty, gold royalty, and Wheaton Precious. Again, depending on when you want to buy it, we think to accumulate on weakness. The phrase is, if you want to drink champagne, you got to take a risk. It comes from race car drivers. So going forward, we're going to be highlighting in many of our events, live and online, 2 things. One, value investing, which is companies that can profit in both bull and bear markets. That's obviously for more conservative investors and should be part of your portfolio for everyone. But then speculations. We like micro-caps with huge upside, but obviously higher risk. These must be done in a basket. It's like private equity or PE. If you just do one, maybe you'll make money, maybe you don't. You do 5 or 10 and you select them well, you'll make money. So we're going to be presenting 3 companies that are on the risk side. The first one is Alaska Silver. And why do we like it? Excellent jurisdiction, good properties, good management. From there, I'm stealing from their thunder. Again, these are only 2-3 minutes just to get you interested to follow the companies. High-grade silver, safe jurisdiction, good team of explorers, social license, good capital structure. Basically what you'd like. So let's hear this briefly and see if you agree with me.
Hello, I'm Kip Mars, CEO and co-founder of Alaska Silver. Our 100% owned silver and gold polymetallic deposits span a 8-kilometer long corridor, home to 2 significant deposits with the scale, grade, and critical elements that modern markets demand. At Water Pump Creek, we've discovered a 75 million ounce inferred resource of silver equivalent
at a really exceptional 980 grams per ton grade. This is not just the high grade, it is really among the highest of our silver deposits in North America and the highest of our 6 peers that are in the silver exploration business. And it's open for expansion both to the north and the south. Connected by a mineralized corridor to the southwest of Water Pump Creek is historic past-producing Illinois Creek gold-silver mine. It closed in 1998 during a period of historically low gold and silver prices. Gold was only $260 an ounce and silver $4 an ounce. Hard to believe at today's prices. It has a resource of over 500,000 ounces of gold equivalent, and it is really just waiting to be mined at today's historic gold prices. Very importantly, Illinois Creek was a fully permitted, fully operational open pit gold mine on state of Alaska lands. This proves it is possible to permit an operating mine on our property. We're just beginning to uncover the system with brand new high-grade gold, silver, and copper intercepts from our 2024 Warm Springs discovery, which is just about less than a mile southeast of the past-producing mine. And I want to talk about gallium. Gallium is America's #1 critical mineral on the U.S. Geological Survey list. It is present in our system. Alaska Silver is uniquely positioned to support clean technology, defense, and the semiconductor industries that are really dependent upon gallium. In 2025, our focus sharpens. We'll be looking at new high-grade targets, our expansion drilling, and metallurgical testing to enhance the gallium discovery. So Alaska Silver is developing a high-grade silver and critical minerals deposit that will really power tomorrow. Looking forward to having you join us. Thank you.
Okay, that sort of worked well enough. We're getting there. Let's go back here. Our next company, besides gold, is like Biotech. And one of the reasons we like Biotech is those that are down 90%, remember I'm a deep value investor, and are not going to disappear because sometimes when they're down 90%, they go all the way. But if they have fresh, good news, they're often quickly tradable 2 to 4 times. And we've had a whole bunch of these happening. So they're worthwhile both as investments, but also for positional traders. So we have to choose good companies in a batch. We like 5 to 10. We usually do 5. So what are the investment highlights of this company? Well, they have exactly what you want. Again, I'm stealing from the company itself, so to speak, or research. Large unmet need, high value targets, milestones coming reasonably soon, not 10 years from now, an experienced team, and cash. Gold and in biotech, cash is everything. They have a runway to 2027. That's about as good as it gets. So let's hear the story and see if you want to add them up to yours. Okay, let me.
Hello, I'm Natalia Rudman, Senior Vice President of Crescendo Communications. I would like to introduce Marty Allaire, who's the CEO of Context Therapeutics. We're traded on the NASDAQ, ticker symbol CNTX. And with that, I'll now hand it over to Marty. Marty, please go ahead.
Thank you so much, Natalia. It's a pleasure to meet everyone. Marty Allaire, CEO of Context Therapeutics. Context is an emerging biopharmaceutical company developing a new class of therapeutics called T-cell engaging bispecific antibodies. I understand that's a mouthful. It's referred to as TCEs for short. TCEs are intended to activate the patient's own immune system to attack their cancer. You might wonder, why do we need such a drug? Well, cancers are very good at promoting their own survival. One of the ways they do that is they cloak themselves from the patient's own immune system. And so what our antibodies do is force the interaction between a specific type of immune cell called a T cell so that it can recognize and bind to a cancer cell. And the concept is if you activate the immune cells close to the cancer cells, they'll attack the cancer cells. And this is a therapeutic strategy that has had great success over the last 2 years. There are not a ton of companies doing this, maybe about 10 well-known companies, including ourselves. And importantly for investors, 2 of those companies just last year had 10x returns for investors, Janux, JANUX, as well as Harpoon Therapeutics. Harpoon was acquired by Merck for $680 million, and Janux had a huge stock run-up in February of 2024 when they had great data. So it's a class that's really gaining traction within the clinical and investment communities. What Context is specifically doing is developing 3 drugs. Our first drug, CTIM-76, is for gynecologic cancers. That drug's currently being evaluated in a phase 1 trial, so it's in patients. Our second drug, CT95, targets mesothelin. Mesothelin is a very large market opportunity. It's found in 30% of all cancers. That drug is as well in a phase 1 trial. So we have 2 clinical stage programs. This isn't pie in the sky basic research. We're actively treating patients and looking forward to data for both of those programs in the first half of 2026. And then we have a third program that we hope to enter the clinic early next year, targeting Nectin-4 that we refer to as CT202. Nectin-4 is enriched in bladder, colorectal, as well as triple-negative breast cancer. So we have 3 exciting programs, all targeting solid tumors, all either in the clinic or about to be in the clinic. To finance this endeavor, as Natalia mentioned, we're publicly traded. We were in the fortunate position last year in 2024 to raise $115 million. So we are well capitalized. We have capital into 2027, and we have no debt. And so we are very well positioned to evaluate these therapeutics on a go-forward basis. Again, we're looking forward to data first half of 2026. Obviously, our capital runs well past that point, and so we think it's a really interesting investment opportunity for investors, given that we're directionally a year out, maybe even a little less, for initial data with capital beyond that standpoint. We have an exceedingly experienced management team with deep biotech operating experience, and we're supported by a tremendous board of investors who have had success in their own careers with biotech. So I appreciate everyone learning a little bit more about Context Therapeutics. If you have additional questions, I encourage you to go on our investor relations website at contexttherapeutics.com.
Our next company, which we did by Zoom, is Foodtech International. And the point of Foodtech is it's in the cosmetic industry. Now, the cosmetic industry is highly profitable, but as we all know, it's highly competitive. This company is about AI in cosmetics, which probably is enough to say what's going to happen, but it has multiple shots at the brass ring. Now, there's a lot going on at the moment. It's not quite at the point it should be. It's almost trading like a private equity by appointment. I would be very careful. I would watch it. We were involved in it. I wouldn't necessarily buy it yet until there's some liquidity, until there's a little bit more information. Unless you buy private equity, you're basically buying it like that, and that means it could succeed or fail. However, it's a company we like. It's just going on the pink sheet trading, but you're talking about 18 cents to 95 cents, which means you have to go back to the Chinese company. I should make a Chinese company. I've listened to the previous thing. You have to go back to the Canadian company. Now, basically, if you remember the last 20 billionaires, when the markets were down, only 2 made money, Warren Buffett and L'Oreal, and that's why we like Foodtech. It's a company we like. It's definitely got many chances to be very successful. I definitely would be watching it on your screen. If you're buying it, be very beware. Once there's a little bit more news coming out, assuming it comes out, then I think we would have a buy signal. And the most you'd lose is maybe a double, because this, if it runs, is a long-term play. Okay. So, coming forward, you may want to listen to our next full market update. That's August 19th, but you can go back to our May 1st. And if you're interested in this, I suggest just subscribe to our YouTube channel. We'll be doing this about once a month in terms of our live events, these very short ones. Hopefully we'll edit it to more than 15, 20 minutes. And then our long 1 hour or hour and a half when we do details, and they're worthy of review. So that's it. Again, we hope to have you make more money with less risk. We're there first, and a stellar performance. So I recommend that you all be cautious. There's a lot happening. I think in the end it will work out all right.